While the mainstream media celebrates economic resilience, a silent crisis is spreading through America's commercial property market. Behind the glass towers that once symbolized prosperity, billions of dollars in value are quietly evaporating. Buildings that once commanded premium rents now sit partially empty across major American cities. Investors who borrowed heavily during the boom years are facing a brutal financial reality. Refinancing costs have surged while property revenues continue to shrink. The result is a growing wave of distressed commercial properties entering the market. Yet while ordinary investors panic, some of the wealthiest players appear remarkably calm, because many elite investors began repositioning their assets long before headlines caught up. Private capital has increasingly shifted toward regions experiencing rapid population growth. Smaller cities and emerging economic hubs are attracting unprecedented investment attention. Artificial intelligence is changing how companies operate and where employees work. Businesses are questioning whether they need the same amount of office space they once considered essential. Every lease renewal now involves a completely different calculation than it did just a few years ago. Meanwhile, local governments face shrinking tax revenues from struggling commercial districts. That pressure could influence everything from public services to future development plans. Some urban planners believe many office towers may eventually require complete reinvention. Converting offices into residential units sounds simple in theory but remains difficult in practice. Construction costs, building layouts, and regulatory requirements create significant obstacles. Yet, many experts argue adaptation may be unavoidable as demand patterns evolve. The cities that adjust fastest may emerge stronger than before. Many of these areas offer lower costs, stronger demographics, and greater long-term flexibility. The transformation accelerated after remote and hybrid work permanently changed. Entire business districts are now struggling to recreate pre-pandemic occupancy levels. Entire business districts are now struggling to recreate pre-pandemic occupancy levels. For landlords, every vacant floor represents lost income and mounting pressure. For banks, declining property values threaten the collateral supporting billions in loans. This creates risks that extend far beyond real estate itself. But the most important story may not be what is collapsing. The bigger story is where sophisticated capital is moving. Next, infrastructure projects are becoming major magnets for long-term investment strategies. Data centers have emerged as one of the fastest growing targets for institutional capital. Logistics hubs supporting e-commerce continue attracting billions in funding. Residential communities in growing regions are also benefiting from shifting migration patterns. The pattern suggests a broader restructuring of economic geography across America. What appears to be a property crisis may actually signal a historic redistribution of opportunity. And for investors watching closely, understanding that transition could become the defining advantage of the decade. The warning signs are already visible in some of the most recognizable downtown districts in America. Buildings once valued at hundreds of millions of dollars are being repriced at startling discounts. For buyers with capital, distressed markets often create extraordinary opportunities. History shows that major fortunes are frequently built during periods of uncertainty, but today's environment presents challenges unlike anything seen in previous cycles. But adaptation requires capital, vision, and time. And during periods of transition, uncertainty tends to create volatility. This is precisely why institutional investors focus so heavily on long-term trends. They are not merely reacting to today's headlines, they are positioning themselves for what the economic landscape may look like 10 years from now. and the clues to that future are already emerging in plain sight. The question is whether the rest of the market will recognize those signals before the next major shift arrives, because by the time the headlines become obvious, the smartest money is often already somewhere else. To understand where wealth is moving next, we first need to understand what investors are trying to avoid. Rising debt obligations have become one of the most significant pressures facing commercial property owners. Loans that seemed manageable during years of cheap money suddenly look very different today. Higher borrowing costs can dramatically change the economics of an entire property portfolio. Energy infrastructure is increasingly becoming a strategic focus for major institutions. The rapid expansion of artificial intelligence requires enormous amounts of reliable power. Data centers are now competing for electricity at a scale few people imagined a decade ago. As a result, regions with abundant power capacity are attracting increasing attention. The next generation of wealth creation may emerge from places rarely discussed on financial television. History repeatedly demonstrates that economic leadership can shift from one region to another. The challenge is recognizing those transitions while they are still unfolding, because once a trend becomes obvious to everyone, much of the opportunity may already be gone. Investors who identify those patterns early may gain a significant advantage, yet demographics are only one piece of a much larger puzzle. Energy infrastructure is increasingly becoming a strategic focus for major institutions. The rapid expansion of artificial intelligence requires enormous amounts of reliable power. Data centers are now competing for electricity at a scale few people imagined a decade ago. As a result, regions with abundant power capacity are attracting increasing attention. The next generation of wealth creation may emerge from places rarely discussed on financial television. History repeatedly demonstrates that economic leadership can shift from one region to another. The challenge is recognizing those transitions while they are still unfolding, because once a trend becomes obvious to everyone, much of the opportunity may already be gone. And the evidence suggests that America's commercial property reset is only one chapter in a much larger transformation. What appears to be a crisis on the surface may actually be the beginning of an entirely new investment era. Throughout history, major wealth transfers have often occurred during periods of structural change. Railroads transformed fortunes in the 19th century. Industrial manufacturing reshaped the global economy during the 20th century. The Internet revolution created entirely new categories of wealth generation. Today, artificial intelligence, energy infrastructure, and demographic shifts are driving the next transformation. Commercial real estate is simply one of the sectors feeling those forces most visibly. The deeper story is about how capital adapts when the world changes. Large institutions rarely wait for certainty before making strategic decisions. Instead, they study probabilities, trends, and long-term structural advantages. That process is rarely dramatic enough to generate viral headlines, yet it often determines where future opportunities emerge. The commercial property downturn is forcing investors to reevaluate old assumptions. Some assumptions will prove resilient, others may belong to a different economic era entirely. The winners of the next decade may not necessarily be those with the largest buildings. They may be those who best understand changing patterns of value creation. In many ways, the map of economic opportunity is being redrawn in real time, and every major transition creates both risks and opportunities. The challenge is distinguishing temporary disruption from permanent change. because those distinctions often determine the biggest investment outcomes. The commercial property collapse story is therefore about more than empty buildings. It is a case study in how economies evolve when technology and demographics reshape demand. And for those paying attention, the signals are becoming increasingly difficult to ignore. The next chapter of wealth creation may already be underway. This content is for educational purposes only. It is not professional financial advice. Investing involves risk. Always do your own research.